Right. Yeah, good morning, guys. Good morning, everyone. If you can hear me, kindly drop a one in the chat. If you can hear me, kindly drop a one in the chat. Let me quickly notify others that we are live. Okay, great. So we are going to keep this session very, very brief. At most by 9:30, we are done. Yeah, thank you. Drop a one in the chat, please, if you can hear me. Let's dive right into today's market analysis briefly. Drop a one in the chat. All right, guys. A quick notification to others that we are live. If you can hear me, drop a one in the chat. All right, so we don't have much time right now, so let's just dive right into today's market analysis. Of course, as always, good morning, everyone, and welcome to T Billion Forex Academy. If you're new here, my name is Timothy, aka T Billion. I'm a software engineer, a forex trader, and crypto investor. This is a weekly live market analysis and trading session where we break down the forex market step by step in a very practical and well-structured way. We hold this session every Monday and Wednesday by 9:00 a.m. West African time. And our primary focus is XAUUSD, GBPUSD, and BTCUSD, followed by other forex pairs you request in the chat. The goal of this session is simple, is to shape and sharpen your understanding of the smart money concepts, which include order blocks, breaker blocks, market structure inducements, liquidity zones, price action, and how you can properly, read market structure, identify key order block zones and breaker block zones and liquidity areas, and most importantly, how you can apply this concept effectively in real market conditions. Okay, so whether you're a newbie trader or you're a beginner trader or you're an intermediate trader or even a pro trader, please stick with me because everything we do here follow a clear top-down analysis process. So with that out of the way, let's dive right into the chart. And so for today, I'll only be analyzing XAUUSD and BTCUSD. Of course, I won't be able to take pairs in the chart because I have a what's it called time constraint. Okay, so let's look at what gold is doing and let's identify potential sell or buy opportunity depending on our directional bias overall. So as always, we begin our top-down analysis process from the daily time frame where we establish our directional bias and identify key order block and breaker block zones. Then we drill down to the 4H time frame, identify other zones, right? Probably refine the zone we've drawn on the daily time frame, refine it on the 4H time frame, and further go down to the 1 hour or 30-minute time frame, which of course is our entry time frame, and identify our reversal or continuation concepts. Basically, as simple as that. You don't need to complicate the chart. Please, before we begin, just give me a minute. A minute, please. Yeah, all right, guys. Okay. Okay, so on the daily time frame, let's shrink the chart and look at where price is heading to, where price is heading to, basically where the next what's it called, liquidity will be delivered, right? So obviously, if you look at this, you can tell that the market is bearish. I mean, without being told, it is obvious that the market is bearish. Okay, so the next thing we want to do is to mark out our external liquidity, right? And if you look at this market is obviously bearish. So the next buy side liquidity lies, sorry, sell side liquidity lies right here. Okay, and don't forget, this is our last break of structure to the downside. This, okay, and for the buy side liquidity, we have it right here. Okay, so we are expecting price to go all the way up here, sweep this liquidity, or come all the way down here and take out this sell side liquidity. Okay, so yeah, we have this break of structure to the downside. And as you can see, market is currently reacting at a key zone, which is this right here. Let me zoom in so you can see my chart properly. All right, external liquidity, sell side, and this right here, 918. Okay, so we have this right here. So this is where price is currently reacting. Okay, so two things are going to likely happen here. It is either price break past this order block zone right here, or it's respect the zone and it's keep selling. But again, we are going to determine whether or not we are going to take this trade on the lower time frame only if we get a reversal pattern at the zone. So let's drill down to the 4H time frame. Yeah, this. Let's drill down to the 4H time frame and further refine the zone. Okay. It is important we acknowledge where price originated from. Yeah, price originated from this order block zone right here, which is this. Okay, this is our demand order block zone, or bullish order block zone. Okay, but again, because we are bearish, directional bias wise, and of course trend wise, we want to look for sell opportunity. However, if this zone gets invalidated, then I might possibly want to, consider a buy to this price level at least, then for a potential sell downward, because this is another, order block zone that I would anticipate a reversal concept. Okay, all right, again, this is our supply or bearish order block zone. Okay, we're good. Now let's drill down to the 4H time frame to further refine these two zones that we've drawn on the 1H time frame. So we have this was by the time we have 920. So by 9:30, we should be done with this. Okay. All right, so this is where price reacted, right at this zone. Okay, let's bring it closer. And this. So if this zone for any reason, failed, we would expect price to, to what's it called, to reverse at this zone. You can see it's the zone where the trend line, crosses through, as well as we also have a valid, order block right there. So it's a high probability zone. Okay, but again, we won't take the trade when price get there, not until we get our reversal pattern on the 1H or 30-minute time frame. Okay, that is it. Now we have these two zones marked out, and let's drill down to the 1H time frame to look for a potential reversal pattern. Then we take our trade accordingly, right? So for this, okay, let me drill down to 30 minutes to drill down into this structure for a clearer picture of this structure right here. Okay, so it's cool. All right, so let's pull this guy right here. Okay, so this is what I'll be anticipating. This is what I'm going to be anticipating. So this is the last swing low. Okay, and this is the last, significant break of structure to the upside, right, on the 30-minute time frame. This is the last significant break of structure to the upside on the 30-minute time frame. I don't want to use this. Of course, if you look at this, I like to use BOS that are, significant, that are obvious. So if I'd use this, then this would be my change of what's it called. This would be my last swing low, which I would anticipate price to take out in order for me to have what's a market structure shift, right? Then this would be my inducement, and this would be the order block I'll be, taking my trade on. If I was scalping, of course, I would consider that, but this is not scalping. I'm not scalping this. So this is where I would have taken my entry right here. Okay. This is where I would have taken my entry. Of course, if you are scalping, you want to factor, you want to pay attention to, break of structures like this, but if I'm not scalping, I rather pay attention to this, a more significant and obvious, break of structure, right? Again, once again, for scalpers, of course, I would consider this, or if I'm scalping, I'll consider this, then this will be the order block I'll be waiting for price at. And as you can see, price has actually tapped into this order block, and of course, we expect it to come and take out this, what's it called, this low. So if I was going to be selling right here, I would be doing this. Like I'll be taking my entry right here at the order block right here. Okay. Then my SL will be slightly above it, like so. Okay. Then my take profit will be at this right here. So that will be a what? A 1:2, 2 risk to reward ratio. And of course, I'm going to be very aggressive in stacking my position around these zones. And of course, that is how we scalp. If you've been following my scalping trade on the private WhatsApp group, of course, this is how I scalp. So, but then we are not scalping, we are, the trading. So I will take this right here. So this is where I would expect price to take out this low, then take my trade accordingly. So this is what I will be expecting right here. I'll be expecting this to happen. I'm expecting something like this to happen. Then around this place, we'll be taking our trade down to this zone right here. Now, because gold is kind of showing a bullish potential, if you go back to the, okay, it's right here. If you go back to the daily time frame, you can see this is where price originated from. See, this is where price originated from. Liquidity was delivered down to this BOS, the last BOS that we had, and price tapped into this bullish, what's it called, order block zone. And the next, destination of price will be the next available, what's it called, external liquidity, which, is most likely to be this, that is if only the bullish trend is going to continue, right? But if it's not going to continue, then price is expected to reverse at these two zones. If this fails, yes, it's going to reverse here, then come back to take out the liquidity below this low. That's how price propagates. Price move from liquidity to liquidity, or price is delivered from liquidity to liquidity. So back to the 30-minute time frame. Okay, we have this, and this is what I will be anticipating. And as soon as I get this, then I'll be shorting my trade right here, and my SL will be slightly below, sorry, slightly above this, and I'll be taking my profits right here. Why am I being conservative with my TP? I'll be taking my profit at this 30-minute order block, right? Why am I being conservative with my TP? Because gold is showing a strong bullish on potential. So if you want to be selling, you have to, be very, very conservative with your TP. Don't be too ambitious, right? So this is it right here. Let me shrink this a little, undo a little. So we have this like so, and we have this right here. Okay, so this is what I'm anticipating. As soon as price gives me this, I'll take my trade and sell to this. And that's a 1:5.62 risk to reward ratio. So please, I think I'm going to end this live stream right here. If you have concern, question regarding this, okay, you can drop your question in the comment section, or you, of course, if you're in my private WhatsApp group, you can drop your questions right there as well. I'll do well to attend to your questions as soon as possible. Okay. So the process is simple. Whatever you've learned here, replicate it on the other chart like BTCUSD, GBPUSD, and all of that, and you're good. That is it. Okay, guys. Um, I think that's it for today. If you have what's it called questions, like I said, drop it in the comment section. Okay. So that wraps it up for today. And today's key lessons, as always, is your directional bias, your structure, your key order block zones and breaker block zones, and lastly your entry, right, which is usually 1 hour or 30-minute time frame. Okay, guys, so if this session has added value to you, don't forget to like the stream, subscribe to the channel, and turn on notifications so you never miss our live sessions. We'll be back again on Monday at 9:00 a.m. West African time. Until then, trade smart, protect your capital, and I will see you in the next session. Peace out, guys.